Have you ever looked at a market chart and just felt like you were missing something? Something, deeper than the lines and the indicators. What if the real story, the actual pulse of the market, isn't hidden in some complex math, but it's right there, hiding in plain sight, revealing who's really calling the shots? Today, we're taking a deep dive into order flow analysis. It's a way of seeing the market that, honestly, most people completely miss.
It really is. Our source today, Order Flow Complete by Michael Valtos, it offers a genuinely eye-opening perspective. I mean, this guy has 3 decades trading for major banks, commodity houses. He's really honed in on what he calls stress-free trades.
Stress-free trades. I like the sound of that. Low risk, high return.
That's the idea. Opportunities that come from truly reading the market, not just guessing based on old patterns.
Okay, so our mission today is to really unpack what order flow actually is. How's it different from the traditional stuff we all learned? And crucially, why it might give you a significant edge, cutting through all that noise to see what's really happening with market psychology and finding those genuine opportunities. All right, let's get into it. The book makes this pretty bold claim right off the bat. 95% of traders lose money. 95%. And Valto says a big reason is they're leaning on indicators like RSI, MACD, moving averages, the usual suspects. So what's the deal? Why aren't those working for most people?
Yeah, that 95% number, it's stark, isn't it? It really makes you stop and think, well, why? The core idea Valtos presents is that traditional indicators are all derived from past price. They lag. They tell you what already happened. Order flow is fundamentally different. It focuses on the real-time volume being traded right now, on the bid that's the price buyers are offering, and the offer, or the ask, which is what sellers are demanding.
Oh, okay. So bid is what buyers will pay. Offer is what sellers will take.
Exactly. And order flow gives you this dynamic visual picture of that battle. Supply versus demand as it unfolds live.
Yeah.
It's not just where price went, but how it got there and who is being aggressive.
Wow. Okay, so it's like instead of looking at a photo finish picture after the race, you're watching the race live, seeing who's sprinting and who's fading.
That's a great analogy.
Yeah.
Yeah. Because think about it. Standard bar charts. Open, high, low, close. That's the result.
Right.
They don't tell you how strong the buyers or sellers were at specific points inside that bar, or how much volume actually hit the bid versus lifted the offer. Order flow charts, they show you all that granular detail. It's about instantly seeing if a potential top or bottom has real conviction behind it, where that supply-demand balance is really shifting. You get insight into the raw market psychology right now.
Okay, that makes sense. Seeing who's really in control dynamically.
Precisely. And Valtos uses some great sort of everyday analogies to make it click.
Yeah.
Like buying a car, right? You and the dealer, you negotiate. Eventually, one of you gets impatient or more motivated.
Right.
They initiate the trade by accepting the other's price. That's the aggressive one. The other person was passive, just waiting for their number.
Okay, I see. One person crosses the spread, basically.
Exactly. Or think about fashion trends. Stores watch inventory, they guess demand, adjust prices. Markets are doing that constantly, assessing value based on what's happening now. Order flow is like the language the market uses to talk about that value assessment.
So it sounds like it's less about needing a PhD in math and more about understanding human behavior.
Yeah.
And just raw supply and demand forces.
It's it entirely. There's that old Japanese saying, consult the market about the market.
Yeah.
It just means pay attention to what the market itself is telling you right now. Don't get distracted by news headlines or indicators based on yesterday's action, because prices are driven by supply and demand, period. And supply and demand are driven by people's emotions, their expectations, and importantly, their actions in the moment.
Okay, so if order flow is this language, what are the key words or elements it uses? What are the building blocks we need to understand?
Right. So at its core, it focuses on 3 key things, but looks at them differently. Price, volume, specifically bid versus ask volume and delta.
Okay. Price seems obvious, but how is it different here?
Well, it's not just that price moved, but how it moved out of an area. What was the force behind it? Like you might see a huge red candle on a normal chart and think, wow, massive selling. But if the order flow inside that candle shows tons of passive buying, just soaking up all that selling pressure.
Ah, so the selling wasn't actually effective in pushing price down further. Someone was there catching it all.
Exactly. It paints a totally different picture of underlying strength. Then there's volume. This is where order flow, really shines.
Right, because normal volume is just one number at the bottom.
Yeah, total volume after the bar closes. Order flow breaks it down.
Yeah.
How much volume traded on the bid, meaning sellers aggressively hitting buyers' bids, versus how much traded on the offer, buyers aggressively lifting sellers' offers.
So you see the aggression level of each side immediately.
Instantly, yeah. If you're in an uptrend and you see strong volume hitting the offer, boom, aggressive buyers are eating up supply. That confirms the trend strength. And then there's delta.
Delta, what's that?
Delta is basically the net difference between that buying aggression and selling aggression within a single bar. If more volume lifted the offer, buyers initiated, delta's positive. If more volume hit the bid, sellers initiated, delta's negative. It quantifies the immediate buying or selling pressure.
Okay, so it's like a mini tug-of-war score for each bar.
Kinda, yeah. And Veltos argues this is way more telling than just where the price closed. A delta near zero, especially if the volume was really high, can signal absorption, a really key concept where supply and demand are fighting it out, but neither side is winning aggressively yet.
Absorption. We'll definitely circle back to that. Now, you mentioned something called the commitment of traders within a bar. That sounds like the weekly report, but you're saying it's different here.
Oh yeah, completely different context. Totally different. In order flow, the COT, or commitment of traders level, is simply the price level inside a single bar where the most volume actually traded.
Ah, okay. Like the point of most intense activity within that bar's range.
Precisely. It's the epicenter of the action for that bar. So for example, if a bar closes higher, but the COT level is way down near the low of the bar.
That suggests sellers tried hard to push it down there, but buyers stepped in massively at that low price.
Exactly. Strong passive buying absorbed the selling right there. It gives you these immediate clues about where the real strength or weakness showed up within the price action.
Okay, this is starting to paint a much richer picture. It seems like knowing who is trading these aggressive versus passive players is critical. Can you break that down a bit more? Why does it matter so much?
Oh, it matters hugely, because it helps you figure out who's likely the smart money and who's just reacting. So, aggressive participants. These are the folks taking the current market price. They hit the bid or lift the offer because they need to get in or out now. They're impatient. They initiate the price moves.
They're the sprinters, the ones driving the change.
Right. Then you have the passive participants.
Yeah.
These guys wait. They put their limit orders on the bid or offer and just sit there. They've decided on their price, and they're not chasing.
Okay, more patient, like setting a trap.
Sort of.
Yeah.
These are often the institutions, the big players. They provide that significant, sometimes almost invisible support or resistance. We see huge volume traded passively, meaning price hits their limit orders over and over at a key, high or low, without breaking through. That's a massive clue. It often signals institutional activity, maybe a major turning point where they're quietly building or getting rid of a huge position.
So these different players leave distinct footprints, and order flow lets us see them in real time. Okay, so what are some of the really powerful patterns that Veltos highlights, things a trader could actually look for?
Yeah, there's several really key patterns that emerge directly from this bid-ask volume and delta information. First, imbalance levels. This is when the volume traded on the bid is way out of whack compared to the volume on the offer at the next price level up, or vice versa. Veltos often uses a threshold like, say, 250% more volume on one side.
Okay, so a big, clear disparity in aggression.
Exactly. It instantly flags where aggressive buyers or sellers are totally dominating. These often mark critical turning points or breakout zones. And the insight is they can offer these high probability, what Veltos calls stress-free entry points.
Right.
Because you see the conviction before the big move really takes off.
And what about stacked imbalances?
Even stronger signal. That's when you get 3 or more of these imbalance levels stacked right on top of each other, all showing pressure in the same direction.
Oh, like a wall of aggressive buying or selling?
Pretty much.
Yeah.
It indicates really intense sustained pressure. These areas often become incredibly strong support or resistance zones. Price tends to come back and test these stacks, giving you potentially very low-risk entries.
Okay, interesting. Then there are trapped buyers and sellers. That sounds painful.
It is for them.
Huh?
Yeah, these are usually shorter-term traders who jumped in late, bought near a high, just as it reversed, or sold near a low right before it bounced.
Oops.
Yeah, exactly. They're trapped in a losing position. What do they have to do eventually?
Get out. Cover their position.
Right. And when they do, they add fuel to the move against them. Buyers trapped near a high have to sell to get out, pushing price lower. Sellers trapped near a low have to buy back, pushing price higher. The cool thing is, order flow can show you these traps forming inside the bar, often before a standard chart even hints at a reversal. It's a powerful heads up.
Okay, and the last one you mentioned earlier, absorption. That sounds counterintuitive, heavy volume, but price doesn't move.
It does sound weird, right? But it's one of the most fascinating and powerful signals. You see tons of volume trading, hitting both the bid and the offer at a specific price level, but the price just churns. It barely budges.
So like a massive battle happening, but it's a stalemate.
Exactly. It signifies that all the aggressive selling is being met by huge passive buying, absorption by buyers, or all the aggressive buying is being met by huge passive selling, absorption by sellers. A massive exchange of inventory is happening under the surface. Valitos really highlights this as a key sign of smart money accumulation or distribution. If there's huge volume but no price progress, someone big is likely quietly building or unwinding a position. It often precedes major trend starts or reversals. It can happen at highs, lows, even mid-trend.
Wow, okay. This really does sound like it changes how you view everything. So how does this connect to the bigger picture? Like standard concepts like support and resistance, or even longer-term trends? Is it just for day trading?
Oh, not at all. That's a key point. Order flow adds a whole new dimension, a much more informed approach to those traditional concepts. Take support and resistance. Instead of just drawing lines on a chart based on past touches.
Which might not hold this time.
Right. Order flow shows you how price is behaving when it gets to that level now. Is volume drying up? Are sellers getting absorbed, hinting at a bounce-off support? Or are aggressive sellers blasting right through it with strong delta? You see the actual interaction.
So it validates or invalidates the level in real time.
Precisely. Same with previous highs and lows. We know these are psychological danger zones. Order flow shows you. Are institutions defending these levels with big passive orders? Or are fresh, aggressive buyers or sellers piling in to break through? The book mentions how institutions often use these levels to reduce risk, maybe taking profits or initiating hedges, and you can see that absorption or distribution happening.
Okay. And the macro approach, you mentioned Valtos looks at weekly charts first.
Yeah, he really emphasizes starting with the big picture, weekly, maybe even monthly charts, to get context. See the forest before you examine the trees. But then, order flow analysis itself can be applied to any time frame. Minutes, hours, days, weeks. It helps you understand who's driving the bus on that time frame, preventing you from getting, as he puts it, hypnotized by intraday price action and trading against the larger flow.
That makes sense. Context is king. Now, the book also mentions institutional tricks like VWAP and iceberg orders. These are designed to hide big trades, right? Can order flow really help us see through that?
That's one of the really compelling aspects. Even with sophisticated algorithms trying to hide large orders, the volume still has to trade. You can't hide executed volume. So VWAP, volume-weighted average price institutions, use this as a benchmark. They want to buy below it or sell above it, on average, to show they got a good execution for their massive orders.
So it's like their average price for the day weighted by volume.
Basically, yeah. While VWAP itself isn't a magic entry signal, looking at order flow around the VWAP level can be revealing. Are buyers getting aggressive below VWAP? Are sellers defending it strongly from above? It helps you see if you're potentially trading in line with or against where the big money is likely trying to operate.
Okay. And iceberg orders. Those sound sneaky.
They are. They're huge orders designed to only show a tiny piece on the order book at a time, just the tip of the iceberg. So you might see only 10 lots offered, but behind that is maybe 1,000 lots.
Wow. How do you spot that?
You often can't spot the order itself easily on a standard depth of market ladder, but the trades resulting from that iceberg order will show up in the order flow data. If you see price hitting a level repeatedly and the order book keeps showing small size refreshing, but the traded volume in your order flow chart at that price is massive, bingo, that's likely an iceberg, indicating significant absorption or supply demand holding that level. Order flow reveals the impact of the iceberg, even if you can't see the whole order itself.
Okay, so this is incredibly powerful stuff. But let's be real, what does this mean for the average person trying to trade effectively? It sounds like there's a lot to learn, maybe some pitfalls.
Absolutely. And this brings up a crucial point Valtos makes repeatedly. Beyond all the technicals, order flow reinforces, maybe more than anything else, the absolute necessity of discipline and solid money management.
The boring but essential stuff.
The absolutely essential stuff. He's crystal clear. There is no holy grail indicator, including order flow itself. Success comes from hard work, practice, consistency, and discipline. Losses will happen. It's part of the game. The key is keeping them small, knowing your personal pain threshold for risk, and crucially, not chasing trades or trying to win back losses immediately. And yeah, there's definitely a learning curve. Reading order flow well isn't instant. It takes screen time and practice.
And the psychological side must be massive too, right? Like even if you see the signals, you still have to act on them correctly without greed or fear manning things up.
Oh, absolutely huge. Veltos warns strongly against overtrading, which often comes from greed after a win or boredom when the market's quiet, or that dangerous feeling of, I finally cracked the code. He stresses something really important. Sitting out is a trade. Sometimes the smartest, most profitable thing you can do is nothing. Just wait patiently for a high probability setup that fits your plan.
Quality over quantity.
Exactly. It's about finding those quality setups, those stress-free trades, not just clicking buttons. Consistency is the goal, not hitting home runs every time. And also having the discipline to recognize when the market gives you conflicting signals or when your initial read just isn't playing out and just taking that small loss quickly rather than letting hope turn it into a disaster. That emotional detachment is so vital.
Okay, that's a really sobering but necessary reminder. Discipline and the psychology are key. Now, given all these complexities, and let's face it, the common pitfalls in trading, you might be sitting there wondering, how do I even start navigating this safely? Where can I apply these insights without getting scammed? Because unfortunately, due to the spread of fraudulent trading platforms out there, platforms that are really far removed from actual trading and investment, finding a safe place is critical. So we've looked into it and we've brought you a secure global platform for trading and investment, genuinely considered one of the best. Through it, you can trade stocks, gold, forex pairs, and many other markets. It's known for being very fast with withdrawals and deposits. And here's a bonus. You'll get a 50% bonus on your first deposit. You'll find the link for that right below the video in the description. And if you're thinking, okay, I want to really master these techniques, learn trading and investment professionally, maybe from the ground up, well, we're excited to announce we'll be launching a professional course designed to do just that. Teaching trading and investment properly right from scratch. You'll find the link for more info on that in the description below the video too. Wow. Okay, so this deep dive into order flow analysis, it really feels like it changes the game, doesn't it? Moving beyond those lagging indicators to see the raw, real-time battle between buyers and sellers, seeing the market's true intentions.
It really does. At the end of the day, the market runs on two basic immutable laws, right? Demand goes up, prices tend to go up. Supply increases, prices tend to go down. Order flow just provides the clearest, most high-resolution lens to actually see those laws playing out moment by moment.
So thinking about that, considering these raw forces of supply and demand that order flow reveals, how might your understanding of just everyday negotiations change? Like haggling for a car, or even noticing shifts in fashion trends? Can you see the subtle order flow playing out there now? What key insight from our discussion today really resonated most with you? And what other market topics are you curious about? Let us know in the comments. We genuinely love hearing your thoughts.
Yeah, definitely let us know. We're always exploring. And if you're interested in diving deeper into things like, say, trading psychology, or maybe some of the advanced market mechanics we touched on, we've actually covered related topics in previous deep dives you might want to check out. And keep an eye out for our next deep dive, too. We'll be exploring something pretty interesting: the surprising impact of global events on seemingly local economies. Should be fascinating.
Ooh, looking forward to that one. So if you liked this deep dive and you want more, definitely hit that subscribe button so you don't miss out. And please remember to check the description below. We've put all the valuable resources and links we talked about today down there. It's packed with info to help you continue your learning journey. Happy trading, everyone, and we'll see you on the next deep dive.